Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Rocket Lab.
If you find our talks useful, please consider subscribe, like, and comment underneath. But before we jump into the regular housekeeping, I have a crazy scenario for you.
Oh, I know exactly what you're going to say.
Right. I mean, what if I told you about a company that hasn't made a single dime in profit, and they just dropped $8 billion in cash to buy an entirely different business?
Yeah, just casually dropping $8 billion.
Exactly. And all of this is so they can basically take down Elon Musk and SpaceX. That is the exact situation we're unpacking today for you.
It really is the biggest story in the market right now. Rocket Lab stock just skyrocketed 24% in a single week on the news of this massive Iridium acquisition.
24%, just a massive gap up. So today's mission is really figuring out if this $8 billion gamble is, a stroke of absolute genius, or if it's just a colossal overreach for a company flying way too close to the sun.
It is easily the boldest move we've seen in the aerospace sector this year. But before we pull apart the mechanics of that big $8 billion question, just a quick word on how to track massive market moves like this one.
Oh, right. Yeah, the chart on this is wild right now.
Totally.
Okay.
So if you want help reading trading charts more clearly, you can check out VIP Algos through the link below in the description.
Yeah, VIP Algos is a TradingView indicator suite.
Right. It shows you visual buy and sell chart alerts, trend direction tools, support and resistance zones, and take profit and stop loss planning areas.
Yeah.
And it works across multiple markets. So stocks, crypto, Forex, gold, futures, all of that.
Just remember, though, it is an educational chart analysis tool only. It's not financial advice, it does not place trades for you, and it definitely doesn't guarantee profits.
Exactly. Trading involves risk, so always manage your risk and do your own research. And yeah, that is an affiliate link below, so we may earn a commission if you use it at no extra cost to you.
All right, so let's move into the wealth building context here. To understand why a pre-profit rocket company is suddenly writing an $8 billion check, you really have to look at their ultimate end game, right?
Yeah, you do.
Yeah.
Because this isn't about getting some quick bump in the share price for a short-term trade.
Not at all.
If you are analyzing this for your long-term portfolio, this is a highly speculative, multi-year growth play. The core thesis behind everything they are doing boils down to just two words.
Vertical integration.
Exactly. Vertical integration. They want to own the entire space economy stack.
Let's break that down for a second, because traditionally the space industry is, well, it's heavily fragmented. You have one company that builds a satellite,
Right.
And then another company builds the rocket to launch it, and then a completely different company operates the network once it's actually in orbit.
Yeah, but think about the early days of huge tech platforms like Apple or Amazon. They realized pretty quickly that controlling the entire ecosystem is where the real leverage is.
Oh, absolutely. Control the hardware, control the software, own the customer.
Exactly. Before this Iridium deal, Rocket Lab was essentially just building the delivery trucks, the rockets themselves.
All right, it's just the trucks.
But by acquiring Iridium, they aren't just a delivery service anymore. They literally just bought the highly valuable cargo, the massive customer database, and the global toll roads, all in one massive swoop.
I love that toll road analogy, honestly. Iridium brings 66 in-orbit satellites to the table. But, the real crown jewel here isn't just the physical hardware floating around in space, is it?
No, it's not. It's the L-band spectrum.
Right, the spectrum. Let's talk about that.
L-band spectrum is incredibly scarce. It's globally licensed real estate in the sky. To understand why it matters so much, think about how your cell phone completely loses service in a bad rainstorm.
Oh, yeah, all the time.
Well, L-band operates at a frequency that easily penetrates extreme weather. It is incredibly reliable no matter what.
Which is why aviation, maritime shipping, and government defense contractors all rely on it.
Exactly. It's the ultimate toll road in space. And Iridium already has 2.55 million existing subscribers paying those tolls every single month.
So wait, they were building the delivery trucks, decided the profit margins on the deliveries just weren't enough, and went out and bought the entire highway system and all the freight.
That's exactly what they
They
did.
did a wildly ambitious strategy, but, we really have to ground this in reality for you listening. This fits a highly speculative, high-risk, high-reward profile.
Extremely high risk.
Yeah, you really have to ask yourself if your portfolio can stomach the immense volatility of a company trying to become the absolute only true end-to-end rival to SpaceX, going toe-to-toe with Elon Musk across the entire space stack is not for the faint of heart.
No, it's not. And ambition costs money. Buying a global satellite network sounds amazing until you look at how they are actually paying for it.
Right. That gives us the bigger picture.
Yeah.
Now let's look at the fundamentals, because this is where the math gets a little crazy.
It does get complex, but the growth momentum right now is actually undeniable. In the first quarter of 2026, Rocket Lab reported $200.35 million in revenue.
Wow.
Yeah, that is up 63.5% year over year. They completely blew past consensus estimates.
63% growth for an aerospace company is staggering. I mean, building rockets is physically intensive. It's not like they're just scaling software servers.
Exactly, and their non-GAAP gross margins expanded massively to 43%. That's up from 33.4% a year prior.
Let's translate that margin jargon for a second. When you talk about margins in a heavy manufacturing business, seeing them scale up to 33% means their factory floors are getting incredibly efficient, right?
Oh, massively efficient. They are figuring out how to build these complex machines cheaper and faster.
Yeah, they're achieving real economies of scale. Plus, they have this massive $2.0 billion backlog. That gives them incredible revenue visibility.
It does, but, and we really need to look at this, we have to pull out the scary numbers now. Because as much as I love 43% margins, the balance sheet tells a completely different story.
Oh, yeah. Let's bring in the skepticism.
Right. So for the full year 2025, Rocket Lab posted a net loss of $198.2 million.
Ouch.
And their free cash flow was deeply negative, just bleeding negative $321.8 million.
So it's essentially a cash incinerator right now.
Pretty much, yeah. And now, to fund this $8 billion Iridium deal, they just took out a massive new $3.6 billion bridge loan.
Wait, a $3.6 billion loan?
Yep. A bridge loan is essentially short-term financing designed to literally bridge the gap until a company can secure permanent financing, like long-term bonds. But it is usually very expensive debt.
Okay, so just to recap this for the listener.
Yeah.
You have an unprofitable company already burning hundreds of millions in cash, taking on $3.6 billion in new, incredibly expensive debt. On paper, that math looks terrifying.
It looks absolutely terrifying until you understand the mechanism of why they bought Iridium specifically.
Okay, lay on me.
It is the perfect strategic puzzle piece to solve that exact cash burn problem. Over the trailing 12 months, Iridium generated $114.4 million in net income.
Oh, well.
But more importantly, they generated $411 million in operating cash flow.
Ah, wait. I see what they are doing here. They essentially bought a highly profitable utility company just to fund a speculative R&D lab.
That is exactly the perfect way to look at it. Rocket revenue is historically very lumpy. You get paid huge sums when a rocket launches, but then you go months without that cash coming in.
Right, it's feast or famine.
Exactly. Iridium, on the other hand, operates on stable, highly predictable subscription-style revenue. Those 2.5 million subscribers pay their bills every single month.
So that reliable cash engine is exactly what Rocket Lab needs to service the interest payments on that massive new $3.6 billion bridge loan.
Exactly. They bought a profitable, cash-flowing business specifically to fund their aggressive rocket development.
So they essentially bought their own bank. They are using Iridium's boring, predictable maritime and aviation cell phone bills to literally pay for rocket fuel.
Yeah, that structural transformation of their balance sheet is brilliant, assuming it actually works, of course.
Right, assuming it works. But that gives us the business picture. Now let's move to the catalyst timeline, because why do they need so much rocket fuel in the first place?
Well, the main event that the entire street is watching is the expected debut of the Neutron heavy lift rocket. Right now, management has filed an FAA license window stretching from July to December 2026.
Okay, so that points toward a Q4 2026 debut.
Right, and this is the absolute make-or-break catalyst for the entire vertical integration thesis.
Let's clarify the hardware here for a second, just so we're all on the same page. Right now, Rocket Lab relies on the Electron rocket. Electron is fantastic, but if we go back to our vehicle analogy, Electron is basically a small box truck. It's great for local, small deliveries.
Yeah, exactly.
But Neutron is the massive 18-wheeler.
Right, because Electron cannot launch the massive payloads required to build modern satellite mega constellations. If you want to put up dozens of heavy satellites all at once, you absolutely need an 18-wheeler.
Right, because you need to dramatically lower the cost per kilogram to orbit.
Exactly. And the U.S. government seems highly motivated to see them succeed with this new 18-wheeler. Along the way to that Q4 launch, we are looking at Q2 earnings in August, watching that backlog conversion.
Okay,
But
yeah.
the massive tailwind here is government defense spending. They recently landed an $816 million Space Development Agency Tranche 3 award.
$816 million. That is huge.
It is. The Pentagon and the U.S. government are heavily incentivizing a domestic rival to SpaceX. Strategically, they just do not want a single point of failure. They need a backup to Elon Musk.
I mean, I totally understand the strategic need there, but I have to push back on the timing here a little bit.
Oh, really? How so?
Well, the market is cheering right now, right?
Yeah.
But the Iridium deal doesn't even actually close until mid-2027 because of regulatory approvals. And the Neutron launch isn't until late 2026 at best.
That's true.
We are literally celebrating catalysts that are a year to a year and a half away from closing. A year and a half in the equity markets is an absolute eternity.
It is a long time. Yeah.
There's just so much room for regulatory hurdles or engineering setbacks or even just macro market crashes between now and then.
You say a year and a half is an eternity, but, the market is a forward-looking mechanism. Which brings us to the chart. Catalysts tell us what could change the story, but now let's pivot to the technicals.
Yeah, let's look at the price structure.
The technical chart shows us that investors are already pulling all those future expectations into today's price. The price structure is pricing in a massive amount of optimism right now. We saw that 16% gap up, leading to that 24% weekly surge.
Let's explain that gap up really quick because it's a critical concept. A gap up means the stock closed at one price on Friday, and the demand was so overwhelming over the weekend that it opened 16% higher on Monday morning.
Right, completely skipping all the price levels in between.
Exactly. That kind of explosive momentum almost always leaves an institutional footprint. I mean, retail traders playing on their phones don't gap a multi-billion-dollar stock 16% overnight.
No, they definitely don't. And according to some analyst models, there is still significant room to run here. The bull case target currently sits at $155.76.
Wow, okay.
Yeah, if it hits that, we are talking about another 53% in total return potential from current levels.
I mean, 53% upside is incredibly enticing. But stocks don't just go straight up forever without resting. Gravity always kicks in eventually.
Always.
When a stock gaps up that violently, it basically creates an air pocket underneath it. So where's the safety net if this momentum cools off and the stock needs to digest this massive move?
Well, if the momentum cools, you really want to look at the $95 to $100 zone. That is a technically interesting reload area.
Okay, the reload area.
Yeah, because in charting, prior resistance often becomes new support. So if the stock consolidates and pulls back, that psychological $100 level is a key area where buyers who missed the initial surge might step back in.
And this is exactly why traders rely on clean chart workflows.
Yeah.
You really have to filter out the emotional noise of a 24% rally and objectively identify those key reload levels.
Definitely.
Which is where a tool like VIP Algos can be, incredibly useful, actually, for planning those support and resistance zones visually on your screen. That way you aren't just guessing where the bottom might be.
Right, you want to plan.
But you still have to manage your own risk, because right now, this chart is stretched like a rubber band. So the chart gives us the price structure, but what does market sentiment look like?
Oh, the sentiment. That technical rubber band is being stretched by a fiercely bullish market sentiment. The narrative taking over the financial media and all the analyst notes right now is that this Iridium deal is the ultimate shortcut.
A shortcut to building a SpaceX-style business. Because instead of spending a grueling decade designing, building, and launching a global satellite network from scratch, Rocket Lab just, skipped the line and bought one of the best legacy networks in the world.
Exactly. And retail engagement is absolutely through the roof on this. If you check the chatter on Reddit and the social media finance boards, the hype for the Neutron launch is at a fever pitch.
I bet.
But it isn't just retail hype driving this. Market scanners are flagging massive options activity too. We are talking about whale transactions, huge block trades, and really heavy hedge fund positioning.
Okay, let's explain what that whale activity means mechanically, just for a second. When massive institutions buy huge blocks of call options, they literally force the market makers who sold them those options to go out and buy the underlying stock.
Right, the market makers have to hedge their own risk.
Exactly. So it creates this self-fulfilling cycle of sustained volatility and upward pressure. The smart money is clearly betting that this becomes the premier space infrastructure play of the decade.
But, and this is a but you have to wonder if the sentiment is too hot.
That is my exact skepticism right there. When from the guy day trading on his phone to the massive Wall Street hedge fund, agrees that a stock is definitely going up another 50%, you have to ask if all the good news is already fully priced in.
Yeah. Are there any buyers left?
Right. When everybody is standing on the exact same side of the boat, that is usually the exact moment the boat tips over. If absolute perfection is already priced into the stock, any slight delay in this master plan could cause a severe, violent pullback.
And if the boat tips over, the valuation is what is going to pull it underwater. That sentiment picture is useful, but we really still need to talk about the risks. The bear case here is substantial.
The valuation reality is the biggest red flag for me by an absolute mile. Right now, this stock is trading at an eye-watering 82 to 88 times trailing sales.
Yeah, that is steep.
Let me repeat that for everyone. Sales, not earnings, not profit. You are paying over $80 for every $1 of revenue the company brings in. That is a staggering, almost euphoric premium.
It leaves absolutely zero margin for error.
None. When you pay 85 times sales, you are paying for future perfection today. If they stumble even slightly, like if a single rocket launch fails, or if a government contract is delayed by Congress, that valuation multiple will violently compress.
Oh, without a doubt.
The stock price could literally get cut in half even if the company is fundamentally doing okay, simply because the expectations were mathematically too high.
And we really have to acknowledge the very real execution risks that could trigger that multiple compression. We keep talking about the Neutron rocket as this massive upcoming Q4 2026 catalyst, but the reality, Neutron is already 2 years behind its original 2024 schedule. Space is hard. The physics are unforgiving. Engineering delays are the industry norm, not the exception.
Oh, man. So to bring back our earlier metaphor, they just spent $8 billion to buy the valuable cargo and the toll roads, but their massive 18-wheeler delivery trucks are still stuck in the factory.
Exactly. And if Neutron fails testing or gets delayed into 2027 or 2028, the entire vertical integration thesis just begins to unravel.
Because Electron is too small.
Right. Their current small rocket simply cannot launch the massive payloads required to upgrade and expand the Iridium network they just bought. They absolutely need Neutron to realize the value of this acquisition.
And don't forget the ticking time bomb of that debt. If the rocket is delayed by 2 years, they still have to pay the interest on that $3.6 billion bridge loan every single month.
Yep, the bank always gets paid.
Exactly. That puts immense pressure on the very cash flow they were trying to secure. So with everything on the table, the massive ambition, the incredible growth, the heavy debt, and the execution risk, what's the final verdict?
Well, based on all the current data, the structural shift in their business model, and the technical momentum, we give Rocket Lab a bullish score of 7 out of 10.
A 7 out of 10, okay.
Yes. The official stance here is a speculative bullish play, and the target horizon is strictly a multi-year hold.
Speculative being the incredibly operative word there.
Absolutely. The ultimate upside driver is simple, but profoundly massive. They are systematically positioning themselves to become the only full-stack space economy rival to SpaceX.
Which is the holy grail.
Right. If they successfully integrate Iridium, launch Neutron on time, and service their debt, the financial upside is astronomical. But the main downside is the sheer weight of that execution risk.
Yeah, it's a lot to juggle.
Developing a next-generation heavy-lift rocket while simultaneously integrating an $8 billion corporate acquisition and servicing massive new debt, that is a monumental task for any management team.
So basically, if you are an investor with a very high risk tolerance and your timeline is measured in years, not months, this vertical integration story is highly compelling.
It is.
But if you are a conservative investor looking for stable, immediate profitability and low volatility, this is a stock you should likely be very careful with or just avoid altogether. And remember, this discussion is an analysis of the current data and mechanics, not financial advice. You always need to decide if an asset fits your personal risk tolerance.
And hey, if you want a cleaner way to read the trading charts and manage that risk visually, check out VIP Algos through a link below in the description.
Yeah, definitely check that out.
VIP Algos is a TradingView indicator suite with visual buy and sell alerts, trend direction tools, support and resistance zones, and TPSL planning areas.
Hmm.
It can really help make complex charts easier to scan, but remember, it is still only an educational chart analysis tool.
Right. It is not financial advice.
Exactly. It does not place trades for you, and it does not guarantee results. Trading always involves risk, so do your own research and manage your risk appropriately. This is an affiliate link, and we may earn a commission at no extra cost to you.
Awesome. Well, before we wrap up, I just want you to step back and think about the massive historical shift happening right above our heads.
It really is wild to think about.
It is. I mean, if Rocket Lab actually manages to pull this acquisition off and get Neutron flying, we aren't just watching a stock trade on a screen. We are literally watching the privatization and the monopolization of the new space race unfold in real time. We are watching billionaires carve up the orbital real estate of Earth.
And if this episode, or rather this discussion, helped you make sense of that new space race, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.